Well, good morning. Thank everybody for joining us today. I am joined today with Brian Smith, Director of Compliance at Restaurant Accounting Services Incorporated Day, and we're here to talk about some more changes that continue to occur. This one is about the definition of non-payroll costs. So, Brian, it has come to our attention that the definition of non-payroll costs has changed. Is that true?
Yeah, for purposes of PPP forgiveness, the Economic Aid Act, which was part of the Consolidated Appropriations Act of 2021, added quite a few new categories that will really help restaurants.
Fantastic. Now, are the changes for the PPP Second Draw Only?
Unfortunately, well, I guess I shouldn't say unfortunately. No, they're for first draw and second draw.
Wow. Okay. So what if the borrower has already applied for forgiveness for the PPP first draw loan?
And I guess that's where the unfortunately comes from, because if you've already applied for forgiveness, you can't go back and amend your application. So whatever you filed with your bank for forgiveness, that's what will stick. So this change doesn't apply to you if you've already applied for forgiveness.
Okay. So why are non-payroll costs so important to the PPP forgiveness process? And why wouldn't a borrower just use wages to equal 100% of their PPP loan so they don't have to worry about producing all the documentation for those non-payroll costs?
Yeah, the non-payroll costs are important because they will reduce our payroll costs. And that is important because now we can go back, or not go back, but for 2021, we can claim the ERTC and the PPP in the same quarter, or quarters. So if you're just going to use 100% payroll costs, you're not going to leave as many wages as you could for the ERTC.
So we're really trying to maximize the forgiveness of both, so you're getting the maximum ERTC credits as well as the PPP.
Absolutely. That is the goal here.
Got it. So which changes to the definition of non-payroll costs will have the biggest impact on the restaurant industry?
It's what the SBA and Treasury refer to as covered supplier costs. And what the definition is a good that is purchased from a supplier of that good that is essential to your business. So in a restaurant, that would be your inventory. That is essential to the business and now qualifies as a non-payroll cost. The purchase, of course, has to be done through a purchase order or a contract. So just your normal buying every day from Cisco or US Foods or any other purveyor that you get your food from.
Well, that's a pretty significant change that will actually positively impact restaurants across the board.
Absolutely. I think that there's no doubt that every single restaurant can hit that 40% non-payroll cost now.
Yeah, very easily. So are there any other changes worth mentioning?
Absolutely. It's another one is what is referred to as covered operations expenditures. And that's payment for any business software or cloud computing service, just like RASI service, that facilitates business operations. For example, the processing, payment, or tracking of payroll expenses or accounting for business expenses. So, right into RASI's wheelhouse. Another one that's would impact most restaurants, covered worker protection expenditures, things like an air ventilation or filtration system. I've talked to quite a few business owners that have put one of those in. A physical barrier, such as a sneeze guard or something like that, to help protect your employees. And then any PPE, the personal protective equipment, would also qualify. And of course, all these expenses need to have been incurred or paid during the covered period.
That's a lot of additional things covered from the first round. That's going to make a huge difference for clients, especially when they had to pivot and add all those PPE expenses and add those sneeze guards and stuff. So that's going to be a great boon for our clients. So what type of documentation do you think will be needed to claim these expenses on the PPP forgiveness application?
Well, definitely, copies of invoices, orders, or purchase orders paid during the covered period, receipts. And then you'd want canceled checks or some type of bank statement that showed that those invoices were paid.
Now, you mentioned a second ago, but I want to clarify just to make sure all our listeners heard it, that the check has to be cut or paid within that time frame, correct?
Exactly. Any expenses paid within the covered period and any expenses incurred within the covered period are eligible.
Okay, that's very important. So Brian, is there any guidance on how long these records should be kept?
Yeah, the SBA states that these records should be kept for 6 years, which is a couple years longer than most payroll tax returns and payroll records. So they want you to hold on to them for quite a while.
All right, fantastic. Well, we sure do appreciate you answering all of these questions for us and keeping us always in the loop of these changes that are occurring. Thank you. Have a great day.
Thank you. Take care.